all, good afternoon. You're watching Closing Trades on EG Now. I'm Anisha Jain. With me is Aisha Faridi as well as Nikunj Dalmia. And as far as the market is concerned, the story of the day is the recovery that we have seen from the bottom of the day. As far as Nifty is concerned, that's sitting at the highest point of the trading session, almost 150 points off the lowest point of the trading session. And large part of that recovery is actually bank-led. The Bank Nifty is high by almost 600 to 700 points from the lows that we had seen. Ditto can be said for the broader markets as well, because at one point of time they were underperforming massively versus the headline index. Now they have evened out quite a bit, so the broader markets too are participating. As we were highlighting, it's PSU banks which are seeing a massive rally. So pull up a PNB, a central bank and IOB, just to name a few. These stocks are firing away in the trading session, while IT and autos, they are cooling off a bit. Of course, crude is on the boil as well, so $92 per barrel is what we are seeing there. And global markets also remain a bit weak, Aisha, ahead of that important US CPI data which is lined up. But otherwise, good momentum as far as market is concerned.
Good momentum. Finally, we seem to have stabilized, and the good news is that after all that chop and churn that transpired yesterday, today we are not just clocking 20,000 but 20,100 plus levels on the Nifty futures, and that's a good gain of about almost 85 points that we're currently seeing. The other sort of relieving factor is that the breadth of the market as well has come back. Sure enough, there continue to be pockets which are still seeing profit taking. You've got the railway, defense names, select power names as well, which are still beaten down. But then again, names like Indiabulls Housing, for instance, have made a solid comeback, and this after a very choppy start that the stock had today. It's finally up in the green by a good 11.5%. The defensive tilt of the market is clearly evident today too. So you've got a Glenmark which is sitting on a gain of about 5.6%. Banks have really come to the fore. PNB as well is powering ahead by almost 7% as we speak. And amongst the large caps, there's Coal India, the Tata Consumer, Bharti, Titan, ONGC. It's a new set of winners which are actually holding the Nifty and providing that apt cushion today. But talk about some of the stock-specific newsmakers as well. KEC has been a buzzer from the word go after those multiple orders that they won, quantum being larger than about 1,000 odd crore rupees. Or for that matter, even GMR Power, which has acquired a 100% stake from one of its arms. That stock as well is looking out very, very smart. There's GE Power as well. They've received a purchase order from Vedanta, the base value of which stands at about 25 crore rupees. So that's another stock which is holding strong. And then Ajanta Pharma as well. In continuation with the defensive tilt of the market, this is another stock which is holding out very smartly in trade. We've got a fundamental expert, Ashi Anand, joining in at the studios right now. But let me quickly take it across to our chartists as well, figure out whether the move today looks sustainable or not. And Kunal, choppy since close yesterday, or in fact for that matter since start yesterday, but we're finally settling in quite good.
It was choppy in the market breadth, but not choppy at all in terms of the index movements, because the Nifty has been very stable at the 20,000 mark. Even yesterday, I think in the second half specifically, the index was just about holding that 20,000 level. Today also, I think throughout the day, more or less, I think the index has been fluctuating at the 20,000 mark. In fact, just after the first hour or so of the market adjustment, I think post that we've seen the index actually taking support at this 20K mark. So that looks attractive. Banking stocks making a good comeback, and a combination of the banking names, both the private as well as the PSU stocks making a strong comeback. Put call ratio for both of the indices, Nifty and Bank Nifty, are back above that neutral territory of 1. That indicates that we are now back into that slight bullish territory on the index front, and tomorrow being the expiry for the Nifty, I think it makes a lot of sense for traders to hold on to the long positions on the Nifty or create fresh longs at current levels.
Right. Okay, let's talk about some trends as well. Naresh, hi, afternoon. Nifty Bank it is. Where do you see leadership within the banks?
So it is getting broader and broader. So it was just say an Axis Bank making a new 52-week high, all-time high. But we are seeing a recovery in the heavyweight like HDFC Bank, which has recovered from 1580, 1600 to 1650 levels. 1700, 1730 remains a major problem for that. You're seeing ICICI Bank come close to the previous all-time highs. SBI, which was a laggard, bouncing. You have Kotak Mahindra Bank, which is bouncing. So we have a set of stocks which are leaders like Axis, IndusInd, a federal bank. But even the heavyweights are starting to take leadership. So it could be ICICI, which could be very interesting, given the weight on the Nifty itself. So looking out for ICICI Bank also to break out about 1,000, 1,010 levels. So that would give a confirmation of more momentum to the banking index itself.
Banks, are they the new defensives? Just think about it. I mean, what is the what is the meaning of defensives? Somewhere where you can see near-term visibility. Where do you see near-term visibility? The big sectors. In banks, IT, no. Defense, yes. Engineering, well, it is subject to an election cycle. Consumer, no ways, it's going to a gut-wrenching slowdown. Pharma, always volatile. So are banks the new defensive now? I think that is something which clearly seems to be the theme. So Kunal, if the Bank Nifty leads the rally, then the bears need to be worried because that's 35% of the index.
But yeah, I think I doubt anyone was bearish on the index in terms of the trends. Now, yesterday was a day when when we specifically mentioned that it was a day to book profits from the mid caps and small caps. But then with the large cap private sector banking stocks are showing signs of weakness or strength, it was actually strength or solidity, if not a strong percentage gain for these stocks. Today, for decisively, I think you've seen the Bank Nifty surpassing yesterday's high, which itself indicates that there is strength in the Bank Nifty. So I would probably believe that for the ones who are sitting out or maybe in a bit of a iffy situation whether to create longs or short on the Bank Nifty, I think today's move indicates that it's actually momentum on the upside. So maybe create fresh longs.
Okay, let's connect with Ashi Anand, CIO, IME Strategies with Valcrate Investment Managers. Nice to have you in our studio. Thank you for joining us. I distinctly remember last time when we spoke, you were bullish on Zomato, Paytm, the entire cohort. Now that interest rates are unlikely to come down in a hurry, what happens to some of these stocks? Because they are a function of what happens to the terminal value, which is a function of underlying interest rates. Sure. What happens now?
So what you may have seen, as in you may have seen a very sharp, you've seen a very sharp recovery from the lows. I think that move is probably largely done. Okay. I'm only talking about the near term.
Of course.
Right. So as interest rates now possibly may take some time to kind of cool off with inflation, kind of you start to see oil prices moving back up. You're seeing food prices under some kind of pressure. So the fall in interest rates may take a bit longer, and therefore from a pure technical perspective, it may take some amount of time for these stocks to kind of recover if you're just looking at that aspect.
Next 2-3 quarters, you think they could move into sideways?
So I think the bigger thing, more than a technical aspect, is what you're seeing happening fundamentally.
Okay.
When we launched our digital disruption strategy, one of the core calls we had taken is that these companies are going to turn profitable a lot faster than what people in the street are expecting. Okay. One of the biggest concerns are why are these companies not making kind of money, right? You are very large, you are growing, but why at such large losses? When these companies get listed, they actually move into a monetization phase. And you're starting to see across the board companies turning profitable a lot faster than expected. Zomato actually turned PAT positive in the last quarter.
For the quarter gone by.
Right, as in it was at least 3 to 4 quarters ahead of expectation. You've seen something similar in Paytm. As you're going into 2 to 3 quarters down the line, you're going to start seeing sustained PAT profitability. And according to us, that is really what's going to drive markets' way. Stock performance a lot more than just technical factors.
Ashi, what about Nykaa and InfoEdge? They also form part of your portfolio, right? Are you throwing in the towel and kind of, getting done with Nykaa, or you're still continuing to maintain the patience there?
No, so absolutely not. We continue to be quite bullish on Nykaa over the longer term. So our strategy is kind of as a quasi-private equity strategy. We're really taking longer term positions in these companies. If you understand what's happening with Nykaa, right? Nykaa is underperforming currently because they had a big base of shops were closed. People weren't going to malls, so all purchasing was happening online. Now, as people are starting to kind of come back, you are seeing a shift away from kind of traditional shop, as in the shift towards online. Some of that is starting to move back towards kind of going back to normal shops and shopping in the mall. This is a temporary high base phenomena. So we aren't too concerned about longer term growth rates in Nykaa. India is a country of 130 crore people. There's only 1 crore annual transacting users on the Nykaa platform. Nykaa has tremendous reach in tier 2, tier 3, tier 4 kind of towns. These towns are starved in terms of BPC products.
You don't think competition from Tira could be an aberration?
So competition is a bit interesting, right? As in you have Reliance coming in, you have Tata's coming in. There is going to be a lot of competition, but the important thing to understand is that online penetration in India is still at extremely low levels, right? So in a market which is growing that rapidly, you can have multiple players come in and existing players can still continue to grow. The thing with Nykaa, what we believe is that it's very difficult to replicate Nykaa's reach with the influencer network. A lot of kind of beauty and personal care kind of products are discretionary driven. You need people on social media talking about things. Now, that reach that Nykaa has built is something which is very difficult to replicate. And that's one of the things that continues to make us quite positive over the longer term, while it is one of the stocks currently underperforming, one of the few stocks.
But this entire bonus issue has left a lot of bitter aftertaste. The CFO resigns. You know, I remember when Nykaa went public, it made Falguni Nair the richest businesswoman in India, right? It commanded a premium because it was cash positive. And here you have the biggest promising star has become really the backbencher. Have markets realized that she was trying to run before she could walk?
So a couple of things, right?
They're valid concerns,
yeah.
right?
You know, these are very valid concerns. So I think the bonus issue is trying to be cute. Yeah. Right, as in she is an investment banker, and you are kind of, and I don't think market participants like kind of being dealt with in that manner. So I think that was a negative perception. One important thing to understand, right, as in with Nykaa, when Nykaa was listed, Zomato, Paytm, all of these were highly loss-making.
Yeah. Yes, yes.
And none of them had a clear path to profitability. So Nykaa was really standing out very significantly. It was a Nykaa, there was an InfoEdge, there was a Ease My Trip, a smaller, but very few digital platforms could actually make money. So when listed market participants who didn't understand this new space were trying to value companies, it was a lot easier to value a company which was profit making. Yeah. As kind of Paytm and your Zomatos have all started moving towards profitability, and those that trend being a lot more visible, it becomes kind of that Tina factor. There is no other alternative factor. That actually kind of.
Why will you not buy Jio Financials? I mean, it's the biggest digital disruptor, right? Or you have already bought it?
So I don't want to talk about what we're buying or what we're not buying, but yeah.
I mean, isn't this like the go-to stock for anybody who's got a promise of a digital fund? Jio Financial has to be there. Like common sense. In India, you have to buy HDFC Bank and ICICI Bank or both.
Sure.
Right? It's like that.
So rather than commenting on whether we bought it, not buying it, and all of that, what we are really like looking at is across sectors, right? And you're very clearly seeing this in financial services. Transactions are moving online.
Yes.
Right? And they're moving online in a very big way. And what we've seen with Paytm, and Jio can really replicate that, and Jio's just, the Reliance Group is just excellent in terms of execution at scale. What happens is when you deal with a bank today, when you deal with an NBFC, the paperwork is sometimes just horrendously slow. KYC requirements, etc. Paytm can extend you a loan in a matter of seconds. No need for paperwork, no need for any of the other cumbersome processes. Jio is now going to be doing something similar. They will revolutionize the way lending happens, wealth management happens, etc., especially at the kind of lower tiers. So you will see a tremendous move. I think really you will, Jio is definitely a very interesting company within the space. But what we do find interesting is it's not just finance. It's finance, it's consumer, it's eating. According to us, the reason what makes us so interested about digital as a theme, while it's a thematic strategy, it's a specific narrow thing, you're getting very good diversification at an industry level.
Okay, actually hang in there, lots more to chat about. We were going to take a very quick commercial break, come right back. We'll continue our chat with our chartist as well as our fundamental expert.
Banks are really coming back. IT is coming back. You got a real comeback even in defense and railway stocks now. RVNL, just all the railway stocks have come back. They've not come back to the levels what they had, let's say, earlier this week. But the fact that directionally, from a sharp decline, the uptick now seems to be coming up now. What a market, man. I mean, one day of rest and then very next day some of these stocks, they bounce back. It was a great Monday, bad Tuesday and a sober Wednesday. Hangover doesn't condive you.
And how would the Friday pan out?
Should we Jomo and be like, it's okay?
No, I think this is too fast, too furious. Because, 40-point drop on RVNL, it was 199 yesterday, 158 today, 40-point drop. And then a comeback to 168, I think is just too much of volatility.
Bitcoin is less volatile than these stocks. Trust me.
There's a trend there, at least.
You can predict
predictable
Bitcoin.
one. But actually, outside of the new age tech world, where else do you find conviction in the market, or is it all looking too overheated to you right now?
No, so we are very comfortable in the large and mid-cap space. And when talking of mid-cap, I'm talking of the larger mid-caps. you are looking at a very strong foundation for growth over the coming decade. And India is really kind of standing out from a global context. I think you're seeing a lot of soft power also starting to emerge with the kind of success of the G20 and various other aspects, our space program, etc. So there's a very strong foundation for growth outperformance in India over the coming decade. And you probably have small and mid caps, specifically kind of probably you've seen a very sharp rally. And it's that space that we are a bit concerned about. But when you're looking at larger space, I think banks have started to move after some amount of time. You're still getting very high quality banking franchises, which are growing very sustainably at about 15 to 20%. And you're getting them at reasonable valuations of between 1.5 to 3 times book. So that's a space where, despite markets being at all-time highs, you're still seeing visibility of growth at the right kind of valuations. As the global economy starts kind of recovering, IT stocks also offer fairly decent value. Consumer in India has never been cheap, right? But you're seeing such a strong headway for growth in terms of consumer spends over the coming decade. Globally, you've seen something that anytime an economy has crossed a $2,000 per capita income mark, there's been a huge increase in discretionary consumption spends. Right now, so when you're looking at companies with valuations at about 50, 60, 70 times, it becomes quite difficult to understand why you should pay those valuations. But what they are kind of capturing in is this potential explosion of growth that people are kind of expecting may happen over the coming kind of decade as discretionary spends start to rise. So when you're managing large and mid-cap kind of money, I think there are enough pockets of kind of interest which are out there. Capital goods, according to our certain pockets, you can still kind of effectively go in. There is a very interesting longer-term theme which is emerging in terms of a value chain shift away from China towards various economies, and India is really going to benefit as part of that. Now, this is something which, given the sheer scale of manufacturing which has the potential to shift, right, and various kind of programs, the cut in corporate tax rates, PLI incentives, various other kind of programs to kind of boost manufacturing.
Sure.
So you're starting to kind of see a foundation for growth, probably similar to the 2002 to 2008 kind of bull market that we saw in India. You had a lot of factors coming together that could drive growth. And you're really seeing that foundation starting to come together. And I think that is where you're seeing these high levels of optimism in India and markets being at an all-time high, even in a time when there are enough headwinds around, right? As in you have.
Right. No, point taken. And this is a discussion we're just having with the management of RR Kabul as well in terms of the kind of manufacturing push we are seeing. But just wanted to shift focus away from that a bit and talk about pharma, because that's the other space which is doing quite well. Naresh, come in here. All the stocks, the likes of Suven Pharma, Ajanta Pharma, Polymed, Granules, Glenmark, Oro, the list really is long and very, very heavy volumes at that, at least 3 to 15 times the usual average. What's your top bet?
So I would go a little contra here. I'll go for Biocon, which is trying to make that move about 275. So that is one which looks promising in terms of risk reward. So I would expect this to go towards 330 levels in the short to medium term. So Biocon is the first pick. Second is to continue to focus on Sun Pharma. The reason being the stock has come back to 1150, 1200, where it was back in 2015, where the cycle topped. So if this can sustain, then this could continue towards much higher levels. And given the low beta of the stock and a relatively lower volatility also on a daily basis, this looks promising as a defensive bet. The rest of the names, it's become tough after such a rally in Glenmark and Aurobindo Pharma to bet. The risk rewards don't look great, but the trend is still positive for a lot of them.
That would listen into what the market veterans have to say about how one should approach this market, because it's been fairly volatile over the last 2 to 3 sessions.
To me, I think these small falls will be bought into, and hence I don't see major correction unless there are some big negative events which turns out. Importantly, one will have to recognize that the stocks have seen vertical movement upwards, and the earnings growth is not going to be vertical movement upward, despite these order books and strong momentum, you will have quarterly volatility for these companies, which has always been the case in the past. And hence, how one deals with that through the next 3-4 years is going to be the important thing.
We had a phenomenal rally in the last 6 months, so probably a correction was much warranted, or probably better late than never. And I think it's a healthy correction for the market, because there are pockets of markets where we've seen stock prices have clearly run ahead of fundamentals, and there's been a fair degree of exuberance or froth, if I may say so, in mid-cap, small-cap space. So I think a correction is much warranted. Aggregate markets are still reasonably priced. Index, if you look at the Nifty index, trading at about 20 times current year earnings, is reasonable in the context of the kind of earnings growth, strong earnings growth that we are witnessing. So I think from here on, much of the gains on the indexes are done, and markets will be more stock specific in that sense.
All right, now that's the recovery which is happening in some of the railway stocks. Before we wrap, please explain it to everybody. क्या हो रहा है?
So I think it's just optimism being carried away, right? As in, it's you've seen this in capital goods, you've seen this in defense, you've seen this in railways. There is a clear story.
I'm yet to meet anybody. I'm yet to meet anybody on the channel who says buy railway stocks, but somebody is buying them today. See, they've recovered. Somebody is buying them, they've recovered. So all I'm saying is that if the fundamentals are so off center, why is somebody buying them?
So what happens is, I think it's not just railway. I think it's a market construct at this point in time. What you have seen is, I think in the last interview with ET now, we were discussing what shows a point when you're starting to see small caps peak. What you have is a clear disconnect happening between valuations and the story. And especially in a period where growth is a bit impacted, right? And in the current, with inflation, consumer growth is weak, the global growth is weak. You're seeing that impact in IT capital. So where are you seeing growth? The entire market starts moving towards that in a big way. As a bull market develops, you have more and more people going towards paisa isme ban raha, move towards that, right? So you're not going into something because of fundamentals or valuations. You're going into something because it's moving up. So I think you're kind of seeing that, and obviously this is not very sustainable, and which is why I think a lot of people, like you're saying on the channel, struggle to explain it.
We're describing the bull market in like a train journey, right? One of our favorite examples, Aisha.
Yeah.
If this bull market is a train journey, but in this case, I never thought that the bull market will be in train stocks. Trust me. If the bull market is a journey, I used to ask Rakesh Junwala that, okay, where has the bull market reached? And to give a smart answer. We have asked everybody, but I never thought that the bull market will be in railway stocks.
No, but part of it is reality. We were just chatting today with the Texmaco management, and they had earlier given a target of 700 to 800 wagons per month by the end of the fiscal. They said next month onwards we'll start clocking that, because there's so much, A, capacity addition, they're getting to raise funds, and there's the need.
But all of this is factored in, right?
Yeah,
As in,
course.
it's you are factoring
I'm just
that
talking
and
about
more.
the pure fundamentals, yeah.
No, but I think there clearly is. There clearly is fundamentals improving in railways, in defense, but just markets getting
overexcited. Okay, Ashi, great to have you on
Thank you so much.
the studio. Thank you so much for taking the time out. Let's take in some closing trades as well on that note. Kunal, 20,100 now on the futures. What are the trades you're betting on?
So I'll still stick to HDFC Bank as a preferred bet. Looks very attractive even at 1650 mark, where the stock is trading right now on the futures specifically. So already been bullish on the stock in the last couple of days. Still maintain a buy as well as a hold on HDFC Bank.
Okay, what about you, Naresh? What's the closing trade that you are executing?
So that would be buy on Bharti Airtel. The stock has slowly and steadily moved into a new all-time high, and given a breakout over the last 3 days, also the stock was sustaining. So a fresh breakout into all-time highs could see some bit of more momentum towards 950 to 980 in the short term.
Point taken. In fact, before I step into a very short break, let me pose this question to Kunal on a couple of these counters. Indiabulls Housing Finance, which is up 11%. PNB up around 9%, and then you have Max Health, which is the only one from the pharma space, which is down almost 4 to 5%.
So Indiabulls Housing, I think, is more of a case of short covering, at least as of now. We need to see at the end of the day whether the stock is out of the F&O ban, because if that's the case, then I think majority of the positions would be closed into the stock price. And if in case that happens, I would actually expect the stock to go into a correction. So we need to probably get a validation whether the stock comes out of the F&O ban or not. So I'll probably skip out for Indiabulls Housing. PNB in fact could be a good case of a breakout. The stock has confirmed a breakout above that 70 mark. Yesterday's and day before high for PNB was around 69, 68.9 approximately. So which means that the stock has confirmed a breakout of this level. I also sense that most of the PSU banking stocks are going through synchronized breakout mode, which means that this could be a sustainable move for the PSU banks. For Max Healthcare, I think it's still into a corrective phase. The correction has just started. The second day of correction for the stock, and looking at the short-term charts, I would expect 550 to be taken out in this phase of correction for Max Healthcare.
It's a PSU, right? Let me see Google how much profits. But seriously, I just want to see it.
Yeah, no, but I think the reason why the stock has been doing quite well for the last 3 to 4 sessions is that Made in India laptop that they have started, and I think the brand name is Smash. And because of that, it's been rallying 10-15%. The float is very little because I think 90% is government held, but nonetheless, that stock is
I think the company was on part of the disinvestment list at some point in time.
Yeah, the BSNL, MTNL, and ITIS.
So this was a hardware company which tried to do something in telecom. They've tried with some tablets also in the past. And there was a time when Government of India wanted to give a free tablet. I think it was, I don't remember the name, I have to Google it. Yeah, there was something where they wanted to give free tablet to students. And ITI in a sense was, rolling it. But that never was very successful in terms of that breakthrough in terms of the product. The stock went up that time. Now it's a laptop. All I'm saying is a 40% recovery from the day's low, 25% recovery from the day's low. These are extraordinary moves, aren't they? Okay. 195 rupees for ITI. Just bear with me, I'll try and look at the financials. I will also want to look at MMTC and STC. Why am I looking at MMTC and STC? Well, very simple. These are stocks which have done very well for themselves in the last couple of days. But if you look at MMTC and STC in terms of operating business, very little operating business is there. So just don't be drawn with price action. That's my limited point. Whatever you're buying, remember, there are two most important words which you need to remember. One is risk and second is margin of safety. Never ever overlook that. I'm going to stop there because sometimes things can happen. But ITI, I think it was on the disinvestment list, what I remember.
Yeah, I was just going through the numbers as we were talking about 1400 crore revenue, but a loss of almost 360 crore for the year gone by. So definitely need to be watchful before you kind of ride this wave of momentum on pretty much everything. But time now to slip into a very short break. When we come back, we'll talk about that and a lot more.
Back with closing trades right here on ET now. Picture perfect market. Even the beaten down railway stocks from yesterday, or for that matter, even start of trade today, they are also seeing a massive recovery, and so is the entire PSU pack too. But the RBI, it seems, has issued directions to banks and NBFCs to release all the original property documents and remove charges registered with any registry within a period of 30 days. Let me take it across to my colleague Ankur Mishra, and exactly here are what does the RBI intend to do.
Yes, it's a relief for borrowers and more works for lenders, because the Reserve Bank of India has clearly instructed that you need to return the property papers which were mortgaged within 30 days. And if they fail to do so, there is a penalty of 5,000 per day. So if a borrower has not received the property paper till 31st day, he will start receiving rupees 5,000 per day as a penalty. And the directions does not stop here. The Reserve Bank of India has also said that the borrower should be assisted for getting the proper paper. If at all there is a wear and tear, he should be assisted in getting a duplicate copy as well. And not only that, the borrower also needs to be guided to the nearest branch where he can collect the paper. So there is a convenience factor which has been added by Reserve Bank of India for borrowers. Of course, it will be more work for lenders for complying to these norms, and these norms are effective December 1, 2023, meaning just after 2 months. However, if you remember, the discussion paper were released earlier only, so the lenders were prepared for adhering to these norms. But after receiving complaints regarding the mispractices, divergent practices, the Reserve Bank of India has now decided that you need to return the papers, the original property papers, within 30 days.
Okay, Very important, if you are not getting your home loan paper back in 30 days, the bank will have to pay you penalty. And this is something which is sheer convenience. You know, one of the breakthrough conveniences which came in the HFC space was that you don't have to do a prepayment penalty if you are prepaying your loan. And that is something which in a sense led to a lot of churn from one bank to another bank. And when that got settled, suddenly for the HFC sector, the numbers are not looking all that great. But this is something which will go down very well if you're planning to pay your home loan and in case you're not getting your papers back quickly.
Okay, so that's about the home loans and the reason why you should look at probably, there's one more benefit basically coming in for the consumers. But let's look at some other stocks which are buzzing around in the trading session. Of course, the entire PSB basket is fairly excited. So let's pose that question to Daljit Singh Kohli. He's joining us on the show. Daljit, what's happening in the PSU stocks? Is there another leg of rally which is likely to happen? Or, you know, just one should take a very, very tempered move?
Good afternoon. Sorry. So yes, see this taking a call blanket that all PSUs should do well. I think that's not a great idea. One has to look at what company one is buying, what is the business there is, and what kind of valuation we are giving. Now, as of last 2-3 months, we have seen that some of these companies have just gone up valuation wise out of whack. Which could be because of the low float also, and because of the sentiment that there was some announcement in the parliament and some statement given, and all after that this move started. So, but as a fundamental analyst, we should understand that ultimately these are temporary things. Finally, the stock will settle down at its own valuation, at its fundamentals. So we have to be very careful when we are entering into this euphoric moment for these kind of companies. We have to understand one thing, that many of these companies, order book was never a problem. They always had a lot of orders, but the problem was execution. Problem was getting payments from the government, because mostly government is the only customer for all these companies. So getting payments from them, in last few years, we've seen those things have improved, but to say that now they will become equal to or better than many of the best private owned companies, I think that will be asking for too much. So we have to be careful. Though we don't brush everything with the same, paint everything with the same brush, we'll take a look at each of the companies separately and then decide. Mostly we are holding in our portfolios, if there is any PSU, that would be more mainly into banks. Others PSUs we have not entered into in our portfolio.
Daljit, everybody who's come on the channel is saying that railway stocks are expensive, please don't buy them. But they refuse to go down. How would you fundamentally analyze railway business? Let's for a minute ignore the price action. Let's ignore what the stock prices are, what the P multiple are. As an analyst, if you have to understand and explain to our viewers which railway company has the strongest model, which railway company does not have a great model, and which railway stock to your mind has a model which is a mediocre model.
See, so railway, you can play with a lot of 2-3 themes. So one is the wagon manufacturers or the coach manufacturers. That is very simple and clean. You can easily understand how many number of coaches will be made, and what each coach costs what amount, and then you can extrapolate that number. You will get the fairly good estimates. So only the hiccup there would be what kind of numbers they will deliver. So if they say we'll deliver 100 coaches, will they deliver 100 or 90 or 80 or 120? You can easily put the table there. So that's one way of playing that. The other way of playing is the component suppliers to this. So like there are companies which supply bearings, there are companies which supply sheet metals, there are companies which do a lot of foam for the seatings, and then there are air conditioning companies. So we have looked at one company which is into many other consumer products, but also doing a lot of work for railways. So if and when we say that all these metros are going to come, trains are going to come, many of these local trains are going to convert into air conditioned, then there will be a lot of activity there. So one action can be done on that side. Then other would be on the safety side. So you have some companies which are into signaling and safety items. So like that, you have to choose the specific portion which you want to play, and then within that play, if the company which you are banking on, if that has a moat, if that has a clear approvals, because railways supplies is again a very long run process. Approvals take 2-3 years to do that. It's not an easy thing to get into railways, so you have to understand that, and accordingly you take. But ultimately, it will come down to valuation and where at what price you are buying. So there are a lot of themes which have already played. Railways have announced that they are going for a capex which is a very large amount of 1 lakh crore or something, or a period of 5 years. So one has to again understand how much of that can come every year. And accordingly, you can make your Excel spreadsheets to understand where these numbers are. It is fairly easy to understand railway companies. It's not a complicated business, but the probability of right execution, getting into the stock at the right price, that is more important, I think.
India Bull Housing, India Bull Finance. Yes, sir.
In ban, right? That's what you said.
Yeah, I think till yesterday it was in ban. I think I'm not sure whether today it's out of the ban, because only then it makes sense to do such kind of trades. But other than that, the stock was I think at 210 to 12, if I'm not wrong, last week or so. Came back towards 166. That was the low the stock made yesterday, and today it's back to 180 plus. So these are very high volatile moves. I typically tend to avoid such names.
Naresh, if one looks at the profile of stocks, India Bulls, BHEL, PNB, Bank of Baroda, they have one thread which connects them all, which is high beta. High beta works when there is risk appetite in the market. It appeared yesterday, and it appeared that there is time the risk appetite was waning away. It appeared that the markets were getting ready for some kind of decline on the downside. But if high beta names like India Bulls, BHEL, PNB are making a comeback, can I safely that the risk appetite in the market is still intact?
So, say today's recovery in a lot of these names which fell the most. So the first thing was they rallied almost 2x from the lows, 3x, 4x. And then yesterday they've fallen 20% from the top. Now, when do we say they are out of the woods is when we start crossing yesterday's highs and the recent swing highs. That's the time you can actually confirm, okay, it was just a correction. So in this case, say if I were to take a chart for, say, India Bull Housing, yesterday's highs were around closer to 190.93. And if you look at a BHEL, yesterday's high was closer to 140. So the recovery is still feeble in compared to the fall yesterday. We are just recovering 50% of yesterday's fall in a lot of these beta names. Can they follow up again, take a sell tick going forward? Difficult to say. But overall, the expectation is when you have such a move, you will fall either closer to 30% or closer to 20%. This is the band where you'll go in these names. So a lot of them already did a 20-30% move. So 210 to 160 was almost a 20-25% move. 145 to almost 120 on BHEL. So overall, the extent of the move is done, and we should ideally go sideways after this bounce in a lot of them.
Okay, so that's the take coming in as far as some of the names are concerned. But let's go across to my colleague Sharad. He's standing by to tell us what's the chatter like in dealing room. And today, of course, it's Bharti Airtel which is making the rounds. Sharad, why is that?
Well, yes, in focus we are having Bharti Airtel, and what we are hearing from the dealers is that there is buying seen in certain counters in the HNI segment, and also a large PE player is said to have acquired stake in the company. Now, importantly, the volumes have also shown strength over the last 2 trading sessions, and the stock has been buzzing in the day's trade. Now, the overall FIs and the FPIs have almost 21% stake in the company, and importantly, the key FIs and FPIs who have already invested in the company as per the recent shareholding pattern, they include the names of the Euro-Pacific Growth Fund as well as Government of Singapore. Now, looking at the triggers ahead, firstly, I'd like to point out that despite increasing the minimum recharge criteria,
there was no loss of subscribers. Apart from this, also the constant ARPU growth and subscriber additions are also aiding and auguring well for the stock. Apart from this, also the expansion in the home brand business, broadband business is something to watch out for, and overall the company has set a long-term target of ARPU of roughly 300 rupees. Now the current levels sitting at ARPU levels are at almost 200 rupees.
Okay, Indiabulls Housing, PNB, Aarti Industries, Glenmark, Idea. Just look at the moves on some of these names. Everything from a 6% move on an Aarti Industries, India Cements holding up about 6%, and then of course there's Glenmark with a 6.25% move. PNB is on a tear, 9.5% is the move there, and Indiabulls Housing, which is seeing an 11% bump up coming in. It's the broader markets which is really sort of coming back with a vengeance, if you will. Having said that, the market does have its fair share of losers as well. So Bata, after a Citi downgrade which kicked in earlier today, that stock is still lower by about 2%. This PFC, which hasn't seen any recovery, and remember PFC, REC were pretty much in tandem with each other and gaining on a daily basis up until Monday at least. That stock is down 1.6% today. Naukri, Jubilant Foodworks and Interglobe Aviation are some of the other red dots in the market. But Kunal, outside of the list of the railway, defense stocks and the power names which we've been discussing ad nauseum since yesterday, outside of that, where else would you be wary and say book your profits right away?
So I think all of those stocks which had run up exceedingly high from the power names, not the traditional large cap power stocks like NTPC, etc., but I think the mid cap ones, the likes of Suzlon and Ratan India Power, etc. Many of these stocks which are 2 digits are power for that. For example, JP Power. Many of these stocks which have risen up 2x, 3x, or maybe more than that in the last few weeks or last few months. That's a pocket which would probably be a good zone to book out profits and wait out for a decent sized correction. Not talking of just 1 or 2 days of odd correction of 10-15%, but ideally I would believe that the correction lasts for at least 15 to 20 days. And in many cases, we've seen corrections, in the tune of 30 to 40% for many of the stocks. So I think it will gradually play out depending on how the market looks on to the other stocks and other sectors. But on the other hand, I think if I have to look at reallocating the capital, I think PSU banking stocks could be one pocket which looks attractive at current zones. Real estate stocks, specifically the likes of DLF, I think Oberoi Realty, Anantraj, if they come back to their respective 50 DMAs or just slightly higher than the 50 DMA, that could also be a good zone to accumulate these names.
Okay, just looking at some of the stocks and pull up a CG Power. In the last few minutes, that stock has seen quite a bit of spike. BEML is also following that move. You have Bank of India, Cochin Shipyard. All of these stocks have seen a bit of a spike in the last few minutes. Pull up the intraday chart of Z as well. There was that SAT hearing that was expected to happen. There's a bit of a move on the stock, so we are tracking that one as well very, very closely. But talking about the space which has been moving higher, that's definitely the pharma space. This is one space, Daljit, that you have been following very, very closely for a long time. Tell me the stocks that you like.
So I can't take the stock names, but I can give you the flavor. We have a lot of pharma stocks in our portfolio. Some of them are basically domestic oriented. So we see that a lot of companies which have India business, and that is growing, especially in branded formulations. Those companies are of interest to us. So a couple of companies there we have in our portfolio. Then we also have, we believe that in US, this pricing pressure probably is now on the ebbing side, and therefore the companies which have larger share of business coming from US, where the margins got eroded, those can be the ones which can see some turnaround in next 1 or 2 quarters. So some companies there are also of interest, which have US business and where the margin turnaround is definitely a possibility. Then we are also looking at some of the diagnostic companies, because again there we believe that the worst is behind now. They had seen a crash in their margins over last 1.5 years, and now with all this competition getting into all of them, so many players have come in. Finally, it seems that companies are settling down. There are some companies who are doing B2G business with the government partnership. Those are of interest to us. So they are likely to, they've got one lot of tenders, and they are likely to see some good business pickup in terms of revenue as well as the margins. So there is a good plethora of companies within this space where one can play around. There are companies in hospitals which are likely to see some margin expansion, some basically average revenue per bed expansion, as well as number of beds expansion. So both that way, and they are into tertiary care. So again, an important niche area where one can look at. So there are opportunities within this space. The space has just started performing now after 1.5 to 2 years of almost no performance. So I think there is a lot of runway there, and one can look for good opportunities there in that.
All right, now 7 minutes to go, and what do we have? A print of 20,000 plus on the Nifty. Naresh, the rally in the banks, especially PSU banks, a one-day wonder, or it is going to be the trend in making for next couple of days?
So it could be much, say at least a couple of weeks, ideally in this case, because we've seen all of them break out and they are crossing the highs which were made almost a year back, from where we saw smaller names fall down 30%. The only problem is after the current move, risk reward is not great, but yes, it could continue further. SBI still looks interesting. Some of the other smaller names like PNB, which has been a favorite, has given a breakout. So looks interesting on dips. Could be a move of another 15% across the board.
Kunal, a one-day wonder or a sustainable rally?
For the index?
No, banks.
No, I think for the banks, I think it's a sustainable rally because this time around the change, Nikunj, is the private sector banks making a comeback. So, again, adding on to the same point, you look at the charts of IndusInd Bank, Axis Bank, other than the likes of HDFC Bank, the PSU banking stocks, all of them are going through a strong breakout. So the beta is very high for PSU banking stocks. Of course, the returns could be higher. But the private sector banking stocks, they go through a formidable breakout. The stability is far more higher for the banking stocks, for the Bank Nifty. And I think if I'm not wrong, Bank Nifty is off by some 300 or 400 points odd from the previous highs in the month of July. So that could be another leg of possible uptrend or push coming out for the banking index. So I think today, if I'm not wrong, is the weekly expiry for the Bank Nifty Wednesday. But I believe post that as well, we could probably expect the Bank Nifty to move up higher. I strongly believe that with the private sector banks making a comeback, this should be a strong breakout mode, and hopefully we would probably be looking at Bank Nifty making a new high pretty soon next week.
There are a lot of our viewers, they've bought into railway stocks and defense stocks. I don't know how many times I'm saying railways and defense, but that's the nature of the market. They did not decide to sell yesterday, or they've not sold off late. Is this strength more like an exit gate? Your out of jail card, where if you wanted to sell, you were not able to sell yesterday, get out in next 2 or 3 days?
I strongly believe so, yes.
This is out of jail card. This strength is out of jail card, right?
See, parabolic rises, they don't sustain. Exponential rises, they don't sustain for too long. So, all of those individuals who decided to maybe exit yesterday could not get an exit because I think the sell-off started in just the first 15 minutes or so. And before, one could decipher, I think the stocks were down just 5-7% on an immediate basis in just the first 15-20 minutes yesterday. And post that, it was just a follow-through price action for many of the railway defense names. Today, there is a minor bounce from the intraday lows, but again, nothing reasonable when you look at it from a price comparison. So that itself tells you that these stocks are under pressure. And with every market correction or a sudden jerk in the market, there is a change of sector. There is a change of dynamics which happens across the sectors. And I think this could be a time where the defense, the railways, the high beta power stocks, etc., which have rallied, I think they should see a substantial round of profit booking. I don't expect a couple of days of profit booking, but I expect at least another 2 to 3 weeks of sustained gradual profit booking into these stocks. So I would expect a correction of at least 15 to 20%, maybe 30% in many cases.
But that's only for the near-term investors and traders, right? Or is this the peak that the stocks are going to see even if for the long haul?
See, confidence always shapes, you are more confident at the high point of the stock. Now, if IRFC, just to give an example, started to get into a breakout of 50, at 55, maybe the confidence is a bit shallow, but I think at 75 and 80, the confidence is extremely high. Now, if the stock from 85 levels falls down to 75, all of those people who have bought late, entered late into the stocks, they are depleting their buffer in terms of their cost prices. And I think that's the point of concern. So it's about the buffer which gets eroded very quickly into these stocks, and I think yesterday was first day where we saw the buffer getting eroded.
Okay. Okay, that was the first sign of confidence getting shaken up when it came to the railway and the defense, and largely some of the exuberant PSU names as well. Let's quickly get in some closing strategies or BTST trades as well on that note. Naresh?
So first is a buy on Bharti Airtel, new 52-week high, all-time high here. Stop loss at 904, target price of 925. Second is a buy on SBI, which has a lot to catch up with the rest of the PSU banking space. Stop loss at 591, target price of 605.
Right, Kunal, your BTST trades?
So two buy calls. So Balrampur Chini is what I would suggest as a buy. Sugar stocks making a good comeback, so sticking to the formidable one. Target of 445, stop loss 400. And Bank of Baroda is something which looks interesting at 208 mark where the stock is trading right now. So would expect 220 as a target and stop loss at 200, suggesting a buy.
Okay, that's pretty much it then on the trading day today. Daljit, we'll let you go on that note. Kunal, Naresh, we'll see you again tomorrow morning as well. We're winding down quite okay actually, irrespective of the cool-off that you had in the broader end of the market, or for that matter, the Nifty as well, which couldn't quite sustain to the 20k mark on the Nifty spot at least. Today, we're comfortably above that level. 20,062 for the Nifty spot, 20,100 plus for the Nifty futures. Tomorrow, of course, you'll have the weekly expiry as well. So let's see whether this level sustains or not. But really, banks are the ones which are at the four. And today as well has been no different. It is the banking constituents which have held out. PNB, of course, has been on a tearaway move. Can Bank, SBI, RBL, BOB, Federal Bank, City Union Bank, they've been, dots of green all across. Even the larger ones, while ICICI Bank was sure flat and HDFC Bank as well moved barely less than 0.5%. But IndusInd Bank, a 2% bump up there, and Axis as well held out very, very smartly in trade. Outside of that, the gains were in a Tata Consumer, Bharti, which saw almost a 3% surge. Titan has held out very smartly. ONGC, BPCL have also done well, as has been the case with the Hindalco. And the broader markets too made a solid comeback. So Indiabulls Housing, RT Industries, Glenmark, India Cement, these have been some of the big winners in trade today. You could add an idea, a GNFC, Granules, NMDC. Kunal just talked about BTST idea. Balrampur Chini was a big winner today, almost a 4% bump up there. Or for that matter, Canfin Homes as well, which held out by 3.5%. Handful of losers as well, so let's quickly draw down that list too. And M&M, L&T took a breather today after that phenomenal 3% of a move yesterday. Divi's, Nestle, Eicher, Cipla, they all saw some cool off, and even IT did not do a whole lot. At least the large cap boys like TCS and Infosys, they closed in absolutely flat, as did Naukri, OFSS, Interglobe Aviation, Bata, Jubilant Foodworks were all of your laggards. But at an index level, it's been a solid comeback today. But let's see how tomorrow pans out. For now, we're going to wind it up right here on this edition of Closing Trade.